Oh, we're good? All right. Do you guys hear me? Perfect. Good morning. Thank you very much. Thank you for joining me for the second day of Paris Blockchain Week. Yeah, we're in for a very interesting one. A lot of us got into crypto thinking that we're here to kill the banks, replace the banks, create a new financial world. Seems like right now what we're doing is we're making fiat faster and better. Yeah, let's hear how the next frontier is conquering equities and bringing them on chain. It'd be great if everyone could, and we'll start from that side of the stage, if everyone could really briefly introduce himself and how he got to this wacky space.
Sure. I think that I'm the bad cop on this stage because I'm a former regulator. Today I'm the head of innovation and the head of the digital assets and digital finance practice at GID, which is one of the largest law firm in France. And my name is Frank.
Good morning. Thank you for having me. My name is Miller with the Solana Policy Institute. I got into Bitcoin in 2013, 2014, living in China, and I'm here to disintermediate financial intermediaries, including securities intermediaries. So excited to be talking about it today.
Hi, Miles Harrison, Chief Product Officer at Amina Group. So we're a regulated global crypto financial services group comprising of a Swiss bank, Austrian CASP, and an SFC licensed entity in Hong Kong. I lead the product and marketing teams across all of those jurisdictions. I first got into blockchain in 2014 when I was working in TradFi. We were experimenting really with how blockchain could create efficiencies with the processes internal to banks.
Hi, I'm Nimrod. I'm the head of the Lava Foundation. Lava is an institutional connectivity layer for the blockchain, so essentially making sure that you can always communicate in and out of the blockchain. And I first got into blockchain, so I'm based out of Berlin, so I first kind of got into the ecosystem back in 2011, but back then I really quickly tried to avoid it as much as possible because it was very, very dodgy at the time. And really got back to it about 4 or 5 years ago.
Perfect. So let's kind of get straight into it. By the way, I'm Itai. I'm from Market Across. We're a marketing and PR firm that represent this event and a lot of other protocols and exchanges and wallets. All right, cool. Let's kind of just hit it. We live in a world where the President of the United States has 2 meme coins. He has the DeFi protocol, a utility coin, and maybe 3 or 4 publicly traded NASDAQ companies backed by these assets. Is this good for crypto, or are we setting ourselves up for a pretty big, I would say, backlash when he's over?
I'll start with that as the token American on the panel here. I definitely think we're setting up ourselves for a backlash. The backlash is already here. At least in the United States, you're working on comprehensive market structure legislation to regulate these markets, and it's become a central issue in that legislation. It shouldn't be a central issue in that legislation because it doesn't really have much to do with crypto policy and regulatory issues, but it has, and I think that's because the President of the United States is doing all of the things you just described. So it's definitely a problem. We're already suffering the consequences and think we will continue to long term.
I can tell you that personally, we have a fair amount of clients who have done, bought World Liberty Financial tokens, have done whatever, or appointed Trump family members into board members, and they come to us and say, "Let's run this PR." And I end up telling my clients, like, "I know bribe has been there for years, but why are we PRing it?" So, what are your thoughts about U.S. Administration involvement in crypto? Is it really all as good as we think it is, or maybe not as well?
That's it. No, I think it's the question today is clearly the harmonization of regulation, because we are talking about global activities, programmable activities, and we cannot just rely on local regulations. So it's clearly, and there are a lot of loopholes also in regulation concerning all types of digital assets and services. I think that what is important today is clearly to help regulators to work on the future pieces of legislation because they don't know how to think and how to do it sometimes. Not always. In Europe, I think that we are clearly in advance on this point, but maybe we have to work with them and to be able in the capacity to help them to find, use cases and to adapt regulation to this new programmable and 24/7 hours markets. And it's clearly, I think, a question of harmonization and not only, focusing on the States or focusing on the EU. We really have to work all together on that.
Yeah, I think from our perspective, it's creating a conversation, it's creating the debate, it's bringing the conversation into the mainstream, which many of us who have worked in this industry for many years have been crying out for. So, who knows where it's going to end and how it's going to end in terms of the US political situation. But certainly it's put MiCA on the map as well, not just with the US, but other jurisdictions. They're starting to look at MiCA. I mean, MiCA is... whenever I travel around the world, people know about MiCA now. 12 months ago, I was having to explain what it is. So it's good from an industry perspective, for sure, creating the conversation. And the other thing that we look at is competition. It's creating competition between the different regulatory frameworks. And what do we know about competition? Ultimately, that moves us forward as an industry. It eventually creates better products. It provides more access to consumers. And that's got to be a good thing. And I think we're already seeing there are some things that maybe they are doing better over stateside, and there is more engagement with the industry directly, right at a political level. And surely there are some learnings that we can take.
I mean, from more the developer or the builder side, what we see all of a sudden, and I think that Trump and his meme coins really pushed as well, is that so companies that before would not talk to blockchain all of a sudden say, well, if Trump can do it, why can't we? And all of a sudden they're going into this space, and I mean, we see it in conversations that all of a sudden are starting with us, with the banks and completely traditional banks or other companies that you would never imagine 3-4 years ago that would actually approach us. And I'm sure that this is a big part of it. I mean, that even comes up in those discussions that, all of a sudden there's this attention, all of a sudden, there's this figure that goes and does these things, so they can do it as well. Why not?
So 2 follow-ups for that. First of all, let's talk a bit about what you just mentioned, which is, we can do it as well if Trump can do it. The question is, what is he doing, or not him, or the administration, what's the effect? So a lot of people might say that the Genius Act was very genius because it cut all the liquidity out of crypto. And the ETFs and Michael Saylor is really great for a lot of institutions, but now we're talking about the equities market. Bitcoin is right now a 1-to-1 or 1-to-10 derivative of the US equities market. So when you hug something so quickly, or so aggressively, you also have the ability to, maybe I would say shrink it a bit. And the other thing, and I think that's also sometimes when you need clarity, is all right, so MiCA's flawed. It took years to develop, at least it's there. But now comes an administration in America where there's like, just do whatever the fuck you want. And how does that work? Because we talking about competition. There is no competition right now. There's no reason for anyone to follow a MiCA if you could just go and say, buy U.S. treasuries and put a Trump person on your advisory board. So we're talking here about equities, and we're talking about a very long play, and we're building all this infrastructure for years. There might be a situation where the baby kills the mother, as they say, and that is kind of what my question is if we do all these equities and all these things, that's great, but this is Paris Blockchain Week, not Paris Equities Week. Like, are we going to maybe wake up discovering that we gave them the rubies on rails and the technologies, but it's really just we're all doing fiat and stock exchange stuff? Like, because it seems like that might be one of the reasons why the administration is doing this. It's the kiss of death, if you ask me. But any thoughts? Wow, everyone seems depressed. I'm sorry.
I'm happy to start. I think that it's important to differentiate what Trump is doing on a personal and familial level from what the administration is doing. I think crypto has survived volatile personalities in its history and has survived them well. And I think what the administration is doing on a policy level does lay the groundwork for what I think is a really exciting vision. For example, in the context of equities, I think people should be able to, if they so choose, trade them on chain using DeFi protocols, self-custody their securities, And in my view, that's an improvement over the current system. I think consumers should have the choice to do that. I think it's awesome that the administration is essentially allowing that to happen as of Monday, and I think that is going to be a long-term durable win that will deliver on the promise of the underlying technology. So I think over the long term, my hope is that a lot of this will be remembered for what the administration has done on a policy level versus everything else.
And do you think that the U.S. policy is defined right now, or just we know it's positive and we can be creative? Because that's also a bit of a problem.
Yeah, no, it is not defined on really much of anything other than stablecoin issuance and regulation. To your point, the Genius Act passed, whether it was genius or not, or if its effects were draining the crypto ecosystem. I had not heard that one yet. But I think the Genius Act from a dollar stablecoin issuance perspective has been successful. Congress is now trying to get the rest of the market structure done, and that's where complications have arisen given the president's personal involvement.
And other people on stage, where do you guys see is there any friction between MiCA and I would say the U.S. Regulation right now, or do they work together well? What are your thoughts on that?
I mean, from our perspective, there's elements that work together that are cohesive, but for somebody that manages products across different jurisdictions, it's not just US versus Europe, right? There's other jurisdictions as well that we have to consider. As you touched on, clarity is not out yet, right? We don't know what it's going to look like in the end. Still, things could change quite dramatically. So I think sometimes we're a little bit ahead of ourselves in forward thinking there. But I think there will be differences, right? And I think it's clear they've already set out that stablecoin reserves and treasury management will be quite different, and it will be interesting to see what the European Central Bank and the governments do in Europe to react to that, and what impact that has on the banking sector.
I think also that the next step is clearly the coordination and the mutual recognition between jurisdictions, between the EU and the States, for instance. It happened in the past for other areas on the market, and I think it's really important to work on that, because today, when you want to provide your activities throughout the EU, for instance, and you come from the States, if you have a regulatory status in place stemming from the US regulation, it's not really a problem. We can compare it, and we have things to compare. But where there's nothing to compare. So it's really important to work on this coordination and the mutual recognition, or a fast-track process. If you come from another jurisdiction outside of the EU, for instance, we could, set up a fast-track process within the EU to make sure that you can provide your activities because you have, a stamp in the jurisdiction where there is a sound regulation, an appropriate regulation for these markets.
All right, perfect. So we've mentioned stablecoins a lot of times in this conversation already. That seems to be dominating the current cycle. I'm sure that the Genius Act is one of the reasons for sure. What are the other ones? And why is stablecoins, what's so innovative about stablecoins? They've been around for a long time. What can we keep innovating in stablecoins? I know you guys just are working on a pretty big deployment in the stablecoins world. What more can be done? Why do we need so many? It's a coin that does one-to-one to a fiat. It seems pretty easy. What's going on?
So we've just announced a partnership with a company called Bitcore, and they're based out of Israel. And it kind of touches also the point that you guys mentioned before, or we talked about before, about the regulation in different jurisdictions. First of all, in Israel, there's no regulatory clarity. So it's both positive and negative, right? So you always want regulatory clarity, but if you don't have it, at least you have an opportunity to shape it. And that's also their approach. So they built a team that would be able to work with the regulator and shape it the best possible. So the president of the company is the former president of Israel, Rubi Rivlin. The chairman of the board of directors is the former chief of police. They brought into the board of directors the former head of the AML authority, former Minister of Innovation. They created a team to be able to shape the stablecoin landscape in Israel in a way that's, as they see prime.
But we're saying all these things, these landscapes, whatever. Yes, it's a piece of code that does one-to-one to a fiat. There's a bunch of them. We can create more. Is there much big of an industry around that? How much innovation can we be talking about? I'm not talking about you guys specifically, but I'm seeing stablecoin conferences and funds that are only going to be in stablecoin technologies. How much of a stack do we need for that?
I think private stablecoins. So I think, to be honest, I don't know. And I don't think we all know. We all speculate. But I think private stablecoins will open up doors to finance and liquidity that we haven't seen yet, right? We see it especially. I think it's very interesting, especially when you see it in when big corporates are looking into their own stablecoins, what they'll do and how that will shape corporate finance and different countries. I think Israel is a relatively small market. The impact that would have there, a small market that is almost imports and exports everything they produce, right? So I think it'll be very interesting.
What are your thoughts?
Yeah, I mean, products tend to be successful when they solve a genuine problem, and they solve it pretty well. And I think stablecoins, I think for many of us that have been in the industry for years, it's like you're sort of alluding to, it's like nothing new. But for many that are coming into blockchain or crypto for the first time, or the majority of the population, it is new, right? And it is intriguing to them. They are learning at the current time. And when we think about what stablecoins do from cross-border payment use case perspective, right, they are quicker. They are cheaper than the incumbent solution, right? And if we look at the comparison between Europe and the US, one reason we've seen an explosion of growth in the US with stablecoins is because if you've ever tried to send money, even just from a state to another state, it's difficult and it's costly, right? In Europe, we have SEPA. SEPA works, right? We're not really fixing anything. So that's why stablecoins within Europe, maybe, and we talk about the US Euro stablecoin imbalance, right? And maybe we'll see European stablecoins grow once tokenization really takes off, because stablecoins are a foundation for tokenization, right? You can't really be fully on-chain if you need to come off-chain to settle. So stablecoins are key, whether they look like they do today or whether they evolve a little bit, whether you call them tokenized deposits or stablecoins. I mean, this semantics is kind of coming into it a little bit, but that's really the key role that stablecoins play, and I think that's why we're seeing such a buzz at the moment.
Thoughts? All right.
Yeah, on stablecoin, regulation rely on the wrapper, but when it's talking about the stablecoins, that the wrapper is not enough. You have to dig into details, because you're right when you say that for one-to-one, models, there's no really a problem. But you have a huge diversity of stablecoins on the market, that, and
Luna worked out great.
Yeah, I know, and it requires to make legal qualification and to make sure that you don't try to circumvent legislation, and I don't know. So it's because of this, and that's why regulation is not it's not finished. I think that we should have new waves of regulations concerning stablecoins in the next years, because the market is wider and wider, and the diversity is clearly very interesting also.
Yeah, and trust, if we really want to see mass adoption, trust is critical. And we talk about some of those stable coins, and that's why Mika is good at the moment, because it gives clarity and it gives trust to consumers. I know what I'm buying, I know what I'm handling, and I know what sits behind it.
Yeah, I'm still struggling to see the interest and market fit of blockchain being the house of creating derivatives for fiat. But synthetics for fiats. But I guess that's what the young kids are talking about these days. So a big, I think, catalyst for where we are right now was ETFs and a lot of structured products getting into the market. Again, do we think that this is a good step, that we're seeing capital markets getting into the space, or something in Bitcoin ETFs, as I alluded maybe earlier, maybe just it's the end stop? So it's a great way for organizations, banks, individuals to say, I want to be into the price action of the market. I'll have my broker, she can go and buy me some Bitcoin ETFs. That's it. Thank you. All these infrastructures, all these things. That's really, really cool what you're building. But my banker has these ETF and is like, so is that a good thing? Because we all really, I think, hoped for it to be seeing a huge influx. And I think it's pretty known right now that people go in and out of the ETFs. They don't leave the ETFs for other digital assets. Let's put it that way. So what does a year and somewhat of ETFs in Bitcoin and Ethereum show us about equities and its potential on-chain?
I think that, for instance, in Europe, we definitely need ETFs on this market. I mean, ETFs with cryptos, and it's not possible because of the regulation. But we need them because for certain kind of investors, it can balance the risk. For those who do not understand clearly the risk associated to this market, it is key. So I think that it's really important to have a very wide range of products, ETFs, ETN, and so on. Plus, of course, the platforms through which you can invest on this crypto market. But ETF is clearly a need today. So you have the chance in the States, for instance, to be able to issue ETFs associated to the crypto market. It's not still possible in Europe. And I think it's really important to accelerate an answer on this market, really, clearly.
Yeah, I don't think there's inherently anything good or bad about being able to buy a digital asset.
I'm not saying good. Are we showing growth into the industry? Everyone here is saying that these things are pieces of Lego that then, stem up into this huge ecosystem we're talking about. The question is, have ETFs brought in what we thought? Because it was supposed to be one of these gold moments. If you would have asked certain people here in the past few years, what are those moments you made it? Pretty sure that getting the ETFs approved was seen as a huge seminal moment.
100%. I completely agree with you, and it's for a reason that is totally, in my mind, disjointed from price action, which is in the US, getting listed as an ETF is a legal status indicator that under the previous administration, you are not going to be treated as a security. So I think it's exciting from a nerdy financial regulatory perspective more than anything, and I think that's why folks considered it to be an accomplishment in the U.S. from the policy perspective, at least.
But we haven't, as the group, we haven't seen a huge change in inflows into digital assets as according of that. There was a bit of a bump, but it's not the day before, the day after will never be the same again. Correct?
Well, yeah. I mean, we have the evidence of the last 12 months since it's indisputable.
I mean, maybe in the context of liquidity, I can attest less to that. But when you talk about the building blocks impact, what we saw is, again, after ETFs coming into the market, the demands from the infrastructure level on blockchain has changed completely. And I mean, we've been in the last 12 months pushing into a new standard of infrastructure that it would so far was, I think in blockchain for the many years we've accepted a standard of infrastructure that would not have been accepted in TradFi or in institutional standards, and now we have to kind of up our game. So we do see that impact, and we do see that kind of building blocks impact or effect that has on the infrastructure level from our perspective.
Thoughts?
Yeah, and we see. I think ETFs will have a role to play. I think much like with other assets, you could say for many different types of assets, why don't you just buy the asset directly? There's often reasons why a particular investor has chosen that vehicle, that financial instrument. But what's really interesting, we've started to see some of our clients, or we see new clients that come in that had never touched Bitcoin before, or Ethereum, then bought an ETF, then started to learn more, started to get more intrigued. Then realized there was providers and players out there that mean that you don't have to manage your own keys, right? That they'll manage it for you, but you're still buying the asset directly. And this is a behavioral change that we're seeing. So we're seeing people actually buy the ETF, because they realize there are other solutions and problems out there. So I think to look at the overall volume and growth of ETFs might not be looking at the whole picture.
All right, cool. So you actually brought me straight into my next question, was infrastructure. So some might have called blockchain crypto a bit of an infrastructure bubble. I don't know what. I was on this stage 2 years ago, and someone from the Ethereum Foundation said that at that point, there was 250 VC-backed L2s on Ethereum. Don't know where we're right now. So we've been building and building and building. A lot of VCs, a lot of great builders, a lot of conferences, a lot of side events. Can we at least now go and say that we're walking into this stage of equities on chain with a pretty decent tech stack? We're building. I'm not saying are we done, but could we now look back and say, wow, this industry has actually developed a really fair amount of tools that now we can give the big players and say, here, conquer your dreams? I'd love to start with that end.
No, it's clearly the time for consolidation. So I think that, as you said, it's what has been created is enormous. So we need now to work on consolidation. We see a lot of M&As, for instance, between the States, Europe, and so on. It started. Concerning the regulation, because this is my perspective, I think it's also important to, when you put something on the market, to make sure that there's a real business model behind. And sometimes we see infrastructures, with a lot of money behind. And at the end of the day, there are already the same models everywhere on Earth. And so, and for regulators, this is a filter that they use, to make sure that it's not only the objective to obtain an authorization, a license, or so on, but you need to prove that you have the capacity to find clients, to find investors, and to be able to work with partners. And most of the time, it's not the case.
I think the on-chain markets are there. I think obviously there's a range of quality of projects in an ecosystem, and I think today it's a fact that you can get better field quality in a more transparent manner on-chain than you can via centralized exchanges for trading assets. I think that's the core vision of DeFi, and it's made real today for certain liquid markets like Sol USDC, and I think that's a net consumer benefit that will be beneficial to investors to the extent we can get securities on chain. So I think, I am nervous responding affirmatively to that question because this is crypto and I'm sure it'll come back to bite me. But yes, I would say with some humility, I think so.
What thoughts? Have we built a pretty good decentralized or centralized digital tech stack for the equities markets to come and conquer?
I would say, to an extent, I think there are still some gaps, particularly when we look at financial institutions and the decision process that we go through on a daily basis on when we want to work with an initiative or a project, and the questions that we ask. We're obviously very focused on security. That has to be paramount, and unfortunately, that hasn't always been the number one focus for certain products or features or initiatives that I come across. Even today, we also then think about the actual kind of essence of getting an equity on chain is one thing, but then from a financial institution perspective, things like market conduct. There are products out there that are looking to solve the market conduct problem, but I think they've been built historically more from a blockchain or a crypto perspective. And less with kind of financial institutions directly in mind. So I think what we will see is there is a lot of collaboration at the moment between the two sides, and I think that we'll see some pretty strong offerings emerge quite quickly. I think the other challenge that we face is crypto. We're a small industry, but we're still quite fragmented. We're very community focused, right? And that makes it difficult. Talking about when we're trying to bring interoperability. And that makes it difficult because if a certain feature is only available on a certain chain, that might make it challenging for a financial institution, depending on where they sit on, not to bring up the topic of permission and permissionless, and public and private, but that all needs to go into the mix, into the decision-making process.
What are your thoughts? Are we there on the infrastructure?
Not quite. I kind of agree with you. I think one of the big criticisms that we have, looking back on crypto and the infra space there is we often we're builders looking for our problems, right? So you'd build a solution looking for a problem for a long, long time. So there were a lot of L2s, there were a lot of different solutions in the market, but they weren't really fixed on solving a particular problem per se.
Well, Ethereum was stuck 3 times in history. We have to have 250 layers to solve the fact that it was stuck 3 times.
Exactly. No, and also other solutions and application layers that were on top of that. We build a lot of things without a concrete problem. And I think the main change that, again, we see and we feel in the last year is that with ETFs, with the institutional adoption, we have more defined problems to work towards. And on the securities is a beautiful example. Just look at the amount of companies that have SOC 2 certificate now versus 6 years ago. I don't think anyone in the industry had SOC 2, right? And now it's a different place altogether. Everybody's getting it. So we now have a more concrete set of problems we're trying to solve as an industry on the infrastructure level.
And the fact that we've built all this decentralized infrastructure, Is that something that these businesses actually want? Because we're talking about all these, Web 1, Web 0, and whatever, and we're coming with all these decentralized, non-control. To the best of my knowledge, a lot of them want the digitalization part of it. They want the tokenization. But when it comes to decentralization, I wouldn't drive a decentralized car. I'm not going to go into a decentralized hospital. So, how much of decentralization is core in what we're building?
So I'll jump there. So decentralization is again a solution that looking for a problem, right? I think you need to focus it concretely on what you're trying to achieve by decentralization. So for us, decentralization allows us to get higher reliability, which is important for connection to the blockchain, right? With DEXs, potentially the decentralization has a different element that maybe we'd see adoption in the future. But it's about not decentralization as the value. And that's another big transition that I think we're seeing now, especially with institutional coming in. It's not decentralization for the value, but if decentralization brings any feature with it that is relevant for the business case.
Like regulatory arbitrage, which a lot of people try to think they'll get from these different DAO structures or whatever, but of course that's not what's driving these organizations. What are your thoughts about the decentralization infrastructure and ethos in this equities on-chain world?
Yeah, I fully agree on what you said, and I think that sometimes we can be too purist in our views. And we're looking for this ideology, and we really want to stick to that and actually bringing it back into a business practice or what makes commercial sense. Ultimately these businesses need to make revenue, and they're focused on user behavior, what their users are asking for or looking for. Ultimately that comes back to trust, safety, security, whether it's decentralized or centralized, right? And I think when we get to mass adoption, you probably won't see consumers putting all of their money into DeFi, right? Because that's a risk. What happens if there's a security incident or a hack, right? You'll probably spread. This is what we see anyway. The future is that you might spread across DeFi, CeFi. As TradFi sort of comes a little bit closer to DeFi. So that we're working to allow our clients to have access to DeFi, to maybe realize the benefits of the yield or returns that come with some of the initiatives, but do that in a way that they feel comfortable.
Thoughts? We're good?
Yeah. If decentralization means everyone is responsible, we know that it means that no one is accountable. So from a legal perspective and for regulators, we need to reinvent their role concerning decentralization, because they need to move from gatekeeper of entry to architect of trust in a programmable world. And it's clearly different. And decentralization is clearly about this, because when you look at decentralized players, for instance, there is someone in the middle. And so it means that someone should be accountable of this kind of activities.
I'm a crypto guy, so obviously I think decentralization is the core driver of the entire innovation of all of this. I think the concept is to create global infrastructure that anyone can use to conduct a financial transaction. I think you could only do that in a way where everyone can participate in maintaining the validity of the ledger. So I think to the extent that is useful to people, then businesses, for example, financial institutions, will seek distribution on those platforms. But I think a lot of these issues we've been talking about here are problems for traditional financial players to solve if they want to, come hang out on decentralized permissionless blockchains. And I think there are things that the crypto folks can do to help them. But I think sacrificing the underlying technological innovation takes us back right to where we started.
I couldn't agree with you more. So let's kind of segue with that. What is already happening in the, I would say, equities on-chain world right now? Maybe more of what the crypto folks are doing. You're part of the Solana policy kind of foundation. Solana isn't officially an American chain, but I think it has very deep American roots and has been working a lot in the environment for a pretty long time. What are some of the cool stuff that you're seeing that's at least happening on the purview of Solana that people could maybe take a look on? What are the core crypto people doing in the space?
Yeah, I think the core, where the super cool marriage between these two worlds is about to happen, and it is happening, is having these traditional assets operating on a permissionless blockchain via decentralized protocols. I think assets can be differentiated from the underlying infrastructure, and you can take all of the amazing innovations that, for example, have developed with these crazy meme coin trading going on in Solana, like prop AMMs, and apply them to traditional financial markets. So there's a lot of issuance going on right now. It's not terribly exciting because literally the regulatory development that's going to make secondary market trading possible came out Monday. So I would definitely, if I were to give you a boring reading recommendation, it's not boring, it's actually completely revolutionary, is go look at the SEC's front-end guidance from Monday. And I think it'll really unleash a revolution for securities markets on-chain.
Anything that you guys are seeing that's happening that, other than your own, of course, amazing work, that people should maybe check out if they want to already learn and see some cool things happening in the space? Any shout out? No? All right. So what I would recommend people take a bit more of a look around that is the concept of, I think, DeFi for equities. And we're seeing different places already talking about that, which is, all right, you're going to be maybe holding or owning the stock or things like that, where in the normal world today, you just hold that stock. But crypto has brought people to think that the fact that that these assets can be yield-bearing assets even when I just sit on them, and a lot of people are finding different models of, I would say, well, if you store your Tesla stock with me or whatever, et cetera, I'm going to give you some type of a yield for it. So I think that that could be potentially very, very interesting. And the other thing, as a marketer, that I think that I'm seeing a lot more and people looking into that is the concept of airdropping equities, which I think could be revolutionary, because I think that a lot of things that we did in crypto with all these incentivization of models of like airdrops or whatever, right now if a new company wants to come out, maybe use my product enough and boom, you can, and what? Buy 20 times this product and you'll get a stock or whatever. So I feel like those are going to be very, very interesting methods. I personally feel that we don't need to care too much about the big boys. They'll care about themselves. We need to find more ways to get the mom and pops holding these things. And I hope and feel that that is the true innovation we'll see in the space.
One thing I just would add on that is that do your homework, right? I think we are heading to a little bit of
don't offend
an issue.
me personally.
No. Just in general, in terms of, I think we're heading to a little bit of an issue where maybe those of us that are deep in the industry understand, but I think many people don't. There's a lot of products out there that perpetuate to be tokenized equities or stocks, and actually they're not. When you lift the lid, they're representations. They're not native on-chain assets. And that, I think, is a little bit of a bubble that's going to burst at some point. I think when people realize that they've bought into a structure, they don't actually have voting rights, or they don't actually own the underlying stock. It's owned by an SPV in an offshore jurisdiction. I think that that's something that we try to avoid and not support those initiatives.
All right, cool. Anything else? All right, perfect. So we're finishing 1 minute earlier. That's great. Everyone will have 1 second to breathe. I will, if possible, ask my distinguished speakers to wait outside the stage there for a few minutes. I'm sure maybe some people will have some questions, and then we won't interfere them with too much noise here in the room. All right? All right, thank you very much, and I want to thank my panel, and thank you all for joining us.
Thank you.
Thank you very much.